Hey guys, per usual, living on this channel's for educational purposes only and is not intended as financial advice. Hope you're doing well on this rainy afternoon. Let's take a look at some charts. Now this isn't a legacy channel or even a metals channel, but I do like to look at the metals every once in a while. So we have gold on the left, silver on the right. These are weekly charts. Again, I will maintain the idea, the hypothesis that silver looks like most altcoin charts pre-move, in that there's some sort of Wyckoffean ranging stuff happening here. It's above the cloud, it's above the 200. In a vacuum, blind, not knowing what this ticker was, this would be a strong buy for me. I don't own any silver, probably never will. Gold, on the other hand, complete mega moon since breaking the 200 and breaking the cloud. These aren't even traditional settings. These are just crypto settings. Again, settings kind of irrelevant. I just like using the settings I use. 2061, 2030. Don't at me, bro. Yeah, so gold mooning based on continued Fed cut rate announcements and economy and coronavirus stuff. So interesting to look at when comparing to Bitcoin, which we like to think of as digital gold. Let's take a look at the VIX versus BTC chart. So the VXX or VIX is the ticker, and it's essentially a fear index. It's technically a volatility index. So when volatility goes way up in traditional markets, VIX will rise as well. Historically, when VIX is up to the current level, which is almost near an all-time high, around 30 to 40, it has been a strong market bounce buy dip opportunity. Obviously, it didn't have massive continuation in February 18 or October 14, but in August 15 and December 18, it was the literal bottom, folks, the literal manifestation of the bottom. Looking at all of the caps together, everything's fading here. There's no real winner. I mean, Tezos is a winner amongst this group. It's doing its niche specialization thing. It's finding a hole in the market cap and running with it. But overall, everything's just getting faded here. Looking at the Bitfinex versus Coinbase Premium, that's down here. So this says that Bitfinex is currently leading Coinbase. Not something I want to see if I'm bullish. You'll probably hear me say that a few times on this video. This is OKEX Futures Premiums. I like to look at this for extremes or trends in premium. So this is premium above spot for quarterly, premium above spot for weekly in the yellow here. You can see premium is continuing to decay, to fade, which is a good thing. It needs to reset. It's not necessarily bullish, but we can't maintain this massive premium for a long time historically. Like, it just doesn't happen. We get spikes and drops, spikes and drops. So it's good that it's resetting. Coming into the next rollover, this could just be natural premium decay as well. It's probably both natural and just market reaction to current price action. Looking at the CME futures contracts, my special chart, by the way, all the links for all the charts and everything I'm going to talk about is in the description below. So after you like, dislike, or comment, you can check those out. So this is CME futures contracts. The two most important things that I see on this is these biannual, these yellow long dated contracts have always been binary, up or down. Currently we are in an up contract, which says we probably will not put in a lower low than the open. And second is the rollover dates have been significant for price volatility. So looking at the last rollover we just had, Feb 28, massive down rollover into that price rollover into that date. Coincidence? Maybe. Market timing? Maybe. But hey, I'm looking at this like I did last video. If you didn't watch last video, one of my best videos ever. No, maybe not ever, but it's a great video. Give it a watch. Watch that one, watch this one, comment on both of them. But what I was saying then, and what I say frequently, is these dates are super important for volatility, for price. You know, look at the September 27th down. Look at the October 25th down. November 29th down. It goes on and on and on. You know, you can run the math on this, but it's pretty obvious what's going on here. Anytime we go into a rollover, it's not bullish historically. So hopefully at this point, even without watching the video, you know what I'm going to say. You know I'm going to say, like, this is what's this on the cloud, this is what's this on the CME contracts. So here's some other contracts they open on December 16th and December 30th. Having May 8th, May 9th or May 8th, it's coming up, folks. It is coming up just around the corner. These CME contracts are in prime position for the expiry to be specially situated around this halving date. Will it have significance? I don't think so. I think the more important dates are these long dated contracts and this December 24th end of year contract. Now, BraveNewCoin has put out a halving site. Again, I'll link that in the description of this video below. Pretty sophisticated, different scenarios that I'm using. I'm using their data to base my halving prediction on 67 days. They break it down here. Pretty interesting stuff. Looking at the pitchfork and the daily 200 and yearly pivots, my thesis is that if we break 8100, we're in for some trouble. If 8100 can hold, if this diag support can hold, if the 200 can hold, we'll be okay. We may put in this shoulder here. You're going to see a lot of wonky head and shoulder, inverted head and shoulders charts on Twitter pretty soon. If you haven't already, they're coming. We're probably going to put in an attempt at a shoulder, and that's got to hold, or else I don't know what else to say other than we go into having bearish, which isn't great. I'm going to show the weekly cloud in a second, which may also say we go into having bearish. Not a good thing. Sideways is preferred, but hey, it's not the end of the world. If we break 81, I think we do test 6.5. These aren't expectations. These are just roadmaps if and when they happen. I think right now the expectation is trend is bullish and it will continue rising. However, that is predicated on legacy not completely diving to zero as coronavirus results for the US hit over the next 2 weeks. So it's going to be an interesting 2 weeks. It's going to be an interesting 67 days here leading into halving. That is for sure. Get your popcorn ready. Buy your tickets now. So here's the weekly cloud. Most important thing I'm seeing is the RSI is actually reset completely. It's zeroed out at 50, which is good. Historically, I don't have the 2011 data on here, but historically, it's pretty cut and dry, black and white. It holds above the 50 or below the 50 for quite a long time. So what I'd like to see here is a bounce on the 50 of the RSI. Probably the most concerning thing is a complete rejection of the cloud resistance. So we didn't break above resistance here, rejected down in basically 3 candles, all the way down to the opposite edge of the cloud again. So in a vacuum, if we get a bearish TK cross with price below the cloud, with cloud already bearish, these aren't good things collectively. If you're bullish, these are all bearish things. You're waiting on the lagging span, which is a bit hidden, but it's in price in cloud at this point, or below price. But collectively, this isn't a bearish, or this isn't a bullish picture. It's a ranging mess picture, especially on the weekly. Again, you want to see this twist stuff happening if you're bullish to the bullish direction. We're going to have a massive flat Kumo at 11.5, but this is going to need a lot of time, which is fine. We're going into halving. It's going to be sideways ideally. This could need 6 months to a year of sideways or ranging, just a massive range here from like 6.5 to 11.5. That's possible, but the weekly chart doesn't give me a lot of bullish confidence at the moment. The daily chart, however, I like it. It looks good. We're above the cloud, we're above the Kijun. We attempted a Kijun bounce. We're getting tossed around here like a rag doll based on legacy. RSI isn't anything specifically to mention, but we did have a really decent setup on the 4-hour with this falling wedge and bullish divergence on RSI. This is exactly what you want to see. This is textbook. This is what I look for. Immediately, if I see a rising or falling pattern, I always look at RSI. Immediately. Very high probability setup here because of the divergence. even though the pop didn't go to where I expected it to, around 9.2, even 9.4, 9.5, still possible. It obviously doesn't look great now, but that's the 50% from high to low, basically, is somewhere around 9.2, 9.5 in that area. There is still a C-clamp here for you C-clamp fans. Basically, this TK, this red and blue line, decent separation here, says we continue in oversold conditions for this time frame. But the daily really needs to hold this 8.5 zone. You know, if we make a lower low, here, and we don't get a div, it's gonna be messy. You know, then the next hope is this 7.8, 7.5 zone. We form some sort of right shoulder. It'd be interesting if we get another pattern on the right shoulder. So we had a pattern here, inverted head and shoulders. We had a failed diamond bottom reversal that ended up being the G candle. So it'll be interesting if we get some sort of pattern here again. I don't really know what it could shape up to be at this point, but maybe a messy W or something. I don't know, but it'll be interesting to watch. So that's BTC. Did an article on ETH this week for Brave New Coin. Check that out. I was surprised in many ways that the fundamental metrics are much better than they were a month ago for ETH. The chart looks bullish. I mean, it looks like everything else in crypto, it's mean reverting, but I didn't mention this for BTC, but hash rate for BTC hit an all-time high the other day. Extremely bullish. All active addresses are up for ETH. Transactions are up for ETH. So these are all bullish things. DeFi value is up. DApp transactions are mostly DeFi now. It's all bullish stuff. I do videos for these Brave New Coin things as well. Check those out if you want more content from me. Again, in the video description below, check that out. Okay, so back to the charts. This is the weekly cloud for ETH. ELX not available on TradingView in its full capacity. I'm working on that. I'm lobbying the people. We have good people on that, top people. But what I'm watching here is this TK cross, this bullish TK cross, and a candle close inside of the cloud. It's currently set up for a move from essentially 200 to 250 to 750. Sounds crazy, sounds insane. Look at all the other weekly cloud charts. These things can happen. The probability increases significantly if we get a bullish TK cross with a candle close inside the cloud. The other thing I'm watching obviously is this Adam Eve or Adam or whatever you want to call it, double bottom pattern, high time frame. Breaking this wick is going to be a challenge. Breaking these previous support resist zones are going to be a challenge on the way up. It's going to be a messy move once we get this E to E initiation. But once it does happen, pretty much I mean, that's super bullish. It's going to be a mess, but you got to bet on the bull if that happens. That's a high time frame, weekly edge to edge setup with a massive risk reward. Your stops are below the cloud, below the Kijun, so basically 200 to 190, 180, something like that is your stop, and your upside is 750, and you just forget about it. Anyway, that's ETH. That's the mega bull meth head case for ETH. On the daily, though, it looks like it's sort of ranging between the VPVR levels, the yearly pivot levels. It's return to the Kijun, return to the 50, the 200 still a bit lower, the yearly pivot's still a bit lower, around 200 USD even. And you'll notice all these zones are between psychological zones of 200 and 300. Upside resistance, again, 385. That's going to be a massive, I just think 350 to 385 is going to take probably 6 months. I hope I'm wrong, but I don't know. If everything goes sideways into Bitcoin's halving, like that's ideal because then it's the most obvious. Like this slow pattern, these are obvious, super easy things to call and trade because it's a no doubter, It's like it's a ascending triangle, it's an ascending triangle. Or it's an Adam Eve, it's like, oh, okay, that's easy. Much easier to trade when patterns take months to form. And same thing here, this was an Adam Eve, and that's what happened, right? Like, okay, Adam Eve, down. Okay. So this is ETH BTC, and I was surprised at how quickly this broke through this massive historic support resist zone at 0255, something like that. broke through the yearly pivot, broke through the daily 200, broke through the cloud, completed this Adam Eve double bottom bullish reversal. So if it can stay on the top side of this yearly pivot, which it's trying to do now, I can see 035 as early as the next few weeks. But again, it may take 6 to 12 months. But it's definitely in the cards. I mean, everything here is super bullish for ETH BTC. I mentioned this in the ETH article and ETH video, but ETH's got a lot of stuff swirling right now with Prog POW, with proof of stake possibly coming as early as July, like ETH 2.0 phase 0. So I don't know, it's up in the air for that one, but let me know what you guys think. Like, dislike, comment, share, subscribe, hit me up on Twitter, and happy trading.